Gina, it was this rotation that everyone got excited about and it's just faded out almost as quickly as it started.
Yeah, it has, although if you look at over the last month, tech stocks have fallen 2%, the market's up 1.5%. So there is a little rotation that's been happening for a while. The one thing to keep in mind is December and January are usually the months of rotation. Maybe this started a little bit early in November. Maybe it goes in fits and starts in December and January. But it is still the sector that outperformed phenomenally in the first part of the year. And since 2009, the sector that performed best from January to November has never outperformed in December. So you have a little bit of seasonal risk with respect to tech still, but there's a lot of evidence that people just want to own these stocks. I mean, the earnings backdrop is incredibly strong. And clearly the sentiment is very positive.
Well, what struck me, Tony, is that we've had this story that's been told over the last couple of weeks that you have to be out of one and in the other. You can't be in both at the same time. For some reason, tech's got to do badly for financials to succeed and vice versa. Tony, why does that have to be the case of it all?
Well, it doesn't, but the perception comes from some of the FANG stocks. If you're in a very slow growth environment, you want to go where there's growth. And that's why people were buying FANG all year. Now there's actual growth, and everybody's kind of on our story, the synchronized global recovery. So they want to buy the more value-oriented stocks. But historically, Jonathan, if you look forward, when the yield curve is flattening from the current level of about 60 basis points, 6 and 12 months after that, financials, tech, and industrials have outperformed in both of the last two cycles. And both were very different in leadership, but all three of those sectors significantly outperformed the market.
Just to pick up on that point from Tony, Chad, is that what we're thinking about, though? Shift from growth to value for next year?
For 2017, we were overweight growth, and now we're considering going neutral on growth and elevating our position on value. To Tony's point, we believe that there is a global backdrop where you have that growth. That impulse is quite effective. We think financials, because of this backdrop, will perform quite well in 2018. Nonetheless, the tax plan also has given a lift to many of these sectors. Consumer staples, a key beneficiary of lower taxes, as well as financials.